Jay Hatfield, why do I want to own the InfraCap MLP ETF right now, especially when there's so much uncertainty around oil prices?
Well, we think that the decline in commodity prices have been overcapitalized into the MLP index. Specifically, it's trading at about a 6.5% yield, which is over just over 2.5%. I mean, 4.5% over Treasuries. Treasuries of now about 220. And historically, that index of the higher quality companies trades at closer to 2.5% to 3% over Treasuries. So we think the overall index is undervalued. And then we try to optimize that higher quality index of the liquid names by writing calls and choosing the companies that are most attractive based on return on invested capital and growth, and then opportunistically using leverage. So we think that not only is the asset class attractive, but there's easy ways to build in some better growth prospects and better long-term return relative to the index, the passive index.
Well, one name that you find attractive is Plains All-American Pipeline, pays a nice 5.5% dividend. Tell me why, that's the yield, excuse me.
Right.
Tell me why you like it.
Well, we like right now the companies that are larger and are in the liquid side of the business as opposed to natural gas or gathering and processing, because they have highly diversified operations and dynamics beyond just commodity risk. So specifically, when commodities drop, a lot of times there's something called contango in the market. So the short-term spot price is way below the futures price. So large companies like Plains can utilize their storage assets and benefit from that, or lease them out to other companies at attractive rates. So it's a more hedged, more diversified, more liquid, lower risk company, and that's where we think you should be when commodity prices are volatile like they have been in the last year.
And you're also bullish on Magellan Midstream, pays a lower dividend, but you still like it? Why?
Really the same reasons. They're in storage, but the other nuance with them is that they have eliminated what's called the incentive distribution rights. Over time, they're an older MLP, and so they retain all the upside from the cash flow is in that particular company. And so we like the return on invested capital and growth that results from both their internal growth projects that have high returns and the fact they don't have to pay any of that out to a general partner through incentive distribution rights.
And then finally, if and when rates rise, do you still want to be in an MLP fund?
Well, statistically, MLPs are not correlated with interest rates and are a nice diversification relative to utilities and REITs, which are. And so particularly with the index at 6.5%, we don't think that they will be significantly impacted when rates rise. They'll be more impacted by the market and commodity prices and investor sentiment rather than just interest rate levels.
All right, thanks a lot, Jay.
Thank you.
Thank you for watching The Street.